Hey everybody, how you doing? Well, it's the end of a short week. Tomorrow's Good Friday, the markets are closed, and we ended on a pretty strong note in the stock market. Now, this morning I sent out an email to MMT Trader subscribers, and I'll just fill you in a little bit on this. It looks like, at least when looking at market sentiment right now, several I think important indicators of market sentiment, market psychology. It looks like we put in a bottom. Maybe it's a temporary bottom, but it looks like we put in a bottom. You have several readings now which show a high degree of negativity, a high degree of bearishness. So I am taking this as a cue that we probably have at least a short-term bottom and could see a pretty decent rally in stocks. I also saw an article, not surprisingly, on Zero Hedge, the blog, saying that Facebook, the stock, the company, Facebook, is going to zero. So anytime you start to see these kind of really, really extreme predictions, all right, Facebook is going to zero. It's valueless, all right. Anytime you see that, it is another sign that things have gotten very, very extended, all right. Now, Facebook is not going to go to zero, all right. The company makes money. It might not make as much as it has made in the past because of advertisers pulling out about fears of privacy, but Facebook is going to be around. But, that's not what I want to discuss. I just want to mention that when you start to see articles like this, Facebook is going to zero, plus some of the other sentiment indicators, which I spoke about in the email. And by the way, if you want a copy of that email, just go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader, and I will gladly send you that email. What else is going on? We have seen in the past couple of days a pullback in gold. Everybody's getting all excited and panicky and worried about that. Like, what's happening to gold? It doesn't move. It's not going anywhere. I'm wasting all this time in a position that is not going anywhere. Conversations with yourself like that go back to what I spoke about yesterday. Seeing things that aren't really there. Convincing yourself of things that are not happening. I mean, we could have had this same conversation 100 points ago, but we're 100 points higher. And yes, gold has been struggling to get above the resistance, to use a technical term, but it will. There's no question that it will. It will as a result of the many fundamental factors that are driving it. Number one, inflation. Number two, we are in a long-term decline of the U.S. dollar. Yes, that is happening too, notwithstanding the fact that you got a little bit of a bounce in the dollar over the last couple of days. The dollar is going down. And three, based on gold's own fundamentals of supply and demand. Mine supply is peaking or already has peaked. Demand is rising. So you have the gold's own fundamentals as a commodity, outside of whatever investment-driven forces are there, the inflation or the falling dollar. Gold's own supply-demand fundamentals are bullish. You have to be, is another example of how, if you want to ride a big trend, you have to be patient. You have to be willing to ride it through all the ups and downs. Now, in the past, I've always mentioned the caveat, my personal caveat, that I am not a gold bug. I never have been. Gold has never been at the top or anywhere near the top of my list of great investments. I do not consider gold to be money. Okay, all of these kind of beliefs that you can apply to the gold bugs and the crazies who always talk about gold. That does not apply to me. But I am a trader, I am an investor, and when the fundamentals dictate, I will get into it. And I got into gold in December 2015 when the Fed reversed course on monetary policy and started raising interest rates. And that was a time that most of the geniuses were telling you that gold was going to crash because rate hikes would squash inflation and it would kill gold. I did the opposite. Why? Because I understand what rate hikes are. Okay, they're price increases. Now, along the same lines, you have the same people or a similar group of people who are looking at the bond market, rallying, looking at interest rates coming down, saying, oh my gosh, the whole entire interest rate rise paradigm is over. It's finished. It's reversing now. Not happening. It's still on. It is still on. You have the same sort of psychological market environment right now with the bond market as you do with gold. You have a lot of people kind of throwing in the towel, lacking patience, lacking understanding, lacking foresight, saying, okay, it's over, rates are going to come back down. They are not going to come back down. They will come back down when the monopolist, the central bank, tells us that they're going to come back down. That's it. It's very easy. If you look at the decline in interest rates, that long-term decline in interest rates that we have had since the crash, since the great financial crash and the recession, there were many times in that decline in rates when you had rallies in bond yields, when yields went back up, and when it looked like that was the end of the decline. But it wasn't, because policy kept the decline alive until it was flipped around. And the same thing is happening right now. And I guarantee you, you can go back, and we will go back and revisit this video at some point when the 10-year Treasury yield is well above 3%. That is going to happen. The line is going to be broken. The trend line. Trend lines do not dictate the fundamentals of what is happening. Policy does, all right? Trend lines are just, they're nothing. They're nothing. There's somebody's subjective interpretation of what is going on without any consideration of the reality, the fundamentals, the things that truly drive whatever it is they're looking at. So, anyway, I want to make this quick video. Everybody, if you celebrate the Easter holidays, Passover, whatever it is, enjoy. Tomorrow's Good Friday. Markets are closed. I'll see everybody back here on Monday, probably. Monday, Tuesday. Have a good one. Bye-bye.